And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Ed show. As always, this is the show where we bring you where the action is in the broader markets, and quite a week that we had last week. Markets hitting yet another new high, and it was all about easing inflation. We got data earlier in the week that showed that consumer price index was down month over month. The markets liked that. And then yesterday, that producer price data showed that inflation for the second month in a row for those wholesale costs has come down. And this is what the markets certainly anticipate and want to take place. We did see interest rates fall. We're going to get into that. And then also take a look at some of those interest rate sensitive areas that responded positively. I will say, while the broader markets are sitting at a new high, as we move through today, you will see a true focus coming into play here. Now, next week, we will get retail sales data, industrial production numbers, and a slew of housing-related numbers as well. So let's go ahead and get started. Take a look at those markets. And here we are, a daily price chart of the S&P 500. And you can see this is that gap up in response to the data relative to inflation softening. We also did have FOMC notes that were released. However, it was at those notes cited that interest rate cuts, the Federal Reserve and Fed Chair Powell is anticipating only one cut through the end of the year, most likely in September. And that did temper the response that we did see to the lessening inflation. And that will come through as we move through today, because taking a look here at the broader markets, you can see we have that gap up and we remain up here at a new high. We have that RSI up here in positive territory. It's also in an overbought position. And as with any stock or index, you want to take a look at precedents, and you will see back here toward the end of last year into the beginning of this year and then into February, we were able to retain that uptrend despite an overbought RSI, and then also that MACD trending upward and in positive territory, keeping that near-term uptrend very firmly in place. From here, let's go ahead and drill down. As always, we're going to take a look at those 11 underlying sectors within the S&P 500, sorted by RSI. So we have our stronger sectors up here at the forefront, weaker down in this lower right quartile. The progression, as many of you may know who watch regularly, welcome back. It is a rather slow progression. It's not going to be very whippy. There was a period where XLK was down in this lower quartile about 5 weeks ago, but here we are up at the forefront, another stellar week. The tech sector up 5.5%. We're going to take a look at some of those major Magnificent Seven stocks that did help the tech sector, and then also another industry group that was very beneficial to the advance in this tech group. And as we move through, we are seeing, I talked about interest rates declining. This is the REIT group, XLRE, and this is a group that fares well as interest rates decline. It allows these companies to acquire more properties with that lower backdrop interest rates. So also moving through, we can take a look at some of these other sectors that are up here at the forefront. And of note is the fact that the S&P 500 was up 1.6%, but beyond technology and REITs, the rest of the sectors were down quite a bit. They were not down, they were up quite a bit less than the S&P 500. And consumer discretionary, certainly one of those names. It was flat for the week. We are retaining that upside momentum with the group up above this key moving average, that MACD just dipping into positive territory. However, I will share with you a view of the retail ETF, and you'll note that it did not fare well last week, but discretionary growth up here at the forefront. So that's certainly good news for the markets and certainly the Nasdaq. As we move down into this lower quartile, you'll see areas such as industrials that are continuing to struggle. The group was down 1.3%, and you can see this decline on that RSI below that 50 and that MACD now in negative territory. Now, industrials will move in response to economic data. They're very cyclical. We did get economic data last week that I talked about that looked at and talked about the slowdown that we may be seeing in certain areas of the market, primarily construction and manufacturing, and then other areas that, again, are very adept at responding to news about the economy. So industrials not looking particularly healthy at this point in time. Also down here at this lower quartile, energy, a bottom performer again this week, down 2.3%. And this is despite an uptick in oil, another economically sensitive area that is remaining in a very confirmed downtrend. And also what I did want to share with you is a view of healthcare. This is XLV, and the group is faltering a bit. We had a sharp advance over the last 2 weeks, and this period of sideways price action, certainly in line with what you would expect. So no alarm there, but of note that it did underperform, as did most sectors last week. So beyond, we're going to take a look beneath those sectors, get more refined as far as outlining where that relative strength is. It's all about identifying that so you can participate, but also being very well aware of where weakness is. Make sure you're not overweighted in those areas that are exhibiting downside price action. So here we are with the Nasdaq. We did not take a look at it, but I will share a view because it is more overbought than the S&P 500. I will talk more about this in my MEM Edge report twice weekly. This Sunday report, we dig all the way into the markets and talk about the possibility. And in this case, given that highly overbought condition here in the Nasdaq, it was up 3% last week. And in that Nasdaq, let's take a look at one of the top performing areas, and this is semiconductors, SOXX. You can see that gap up again on Wednesday in that lowered interest rate environment, but also there was some solid news in the group. Nvidia, of course, had its stock split last week. We'll take a look at that as we move through, but there were other areas of superior strength within semiconductors, and I will share with you some stocks that are looking quite compelling at this point in time. And true to any move into a sector or an industry group, it has been and remains rather selective as far as those names that are participating. And I will share again with you one area. Also of note, I highlighted this in my midweek report this week. Software stocks have regained their uptrend. This is IGV. Software ETF. You can see that RSI now appear in positive territory. Now, we don't have that MACD confirmation quite yet. We did get nice volume last week on this downtrend reversal attempt. So in essence, at this time, we do appear to be clinging to that new uptrend. However, it did spur me to add 2 names to my suggested holdings list midweek as the group has turned positive. As we move through, we can take a look at other areas here because home builders is certainly one of those interest rate sensitive areas. And you can see we had an early week gap up. Overall, the group was up 2.2%. It did give back quite a bit today. So this is a group that has been mixed. And as noted, we do have those economic data points, about 3, maybe 4, that are relating to housing starts, home builder confidence, and so on. So that may give the group a boost. But again, this downtrend reversal is not confirmed with this MACD. And then we do have waffling here with that RSI closing back below 50. So not a confirmed downtrend reversal quite yet in the home building area. Also, I talked about retail and the consumer discretionary. XRT is the S&P retail ETF, and it lost almost 2% this week. And this is another area that initially had a nice downtrend reversal. We had a couple of companies coming out with good numbers, but since then it has lagged. And a lot of the names in that group that are lagging are former winners from a year or 2 ago that are struggling, Lululemon among them, and Etsy and others. So the group overall is in a very wide and loose trading range, not that nice tight uptrend that we experienced back here in February. So not an area I would overweight at this time. Moving through, taking a look, I did mention that drop in interest rates. This is the yield on the 10-year. And you can see this nice significant drop that began on Wednesday into Thursday. And then a bit further below, we did end at that 4.3 2 level. Very constructive as it relates to the broader markets. However, as noted, we did not see a widespread rally. Instead, very, very focused, but most sensitive to interest rates rising are going to be growth stocks. They will falter. And we did see certain vibrancy in areas of growth this week, while industrials and other areas lagged. So of note there. And as we talk about that move into software, I did want to share a stock that certainly caught my attention within my screening this week, and this is Cadence Design, CDNS. This gap up on Wednesday in response again to that reduced interest rate environment. I'm going to dip down here and add a 5-day simple moving average. And that can be really very helpful as far as keeping your eye on pullbacks and possible buy opportunities. And that's this blue line. So once a stock really takes to an advance, moves into a strong uptrend, pullback to those 5-day can be a buying opportunity. And moving forward with another software name, and this is Adobe. They came out with earnings ahead of estimates. Management guided growth higher. But one reason that really stood out, and it's why the stock gapped 14.5% today, is management talked about AI-related growth. And here we are with that gap up, but of note is the fact that we remain below this 200-day simple moving average. While we do have a positive RSI now in an overbought position after today's sharp advance, you can see that MACD has not confirmed that. We're not seeing it moving into positive territory. When you're on the lookout for downtrend reversals of this nature, by and large, given that sharp decline, it may take time for this reversal to truly materialize. Perhaps a bit of consolidation here before it advances ideally back above that 200-day simple moving average. From here, I do want to share a view of the Magnificent Seven names, and most of them outperformed. We talked about Nvidia's almost 9% advance. This is another view with that 2-month daily chart. RSI. So your stronger areas up here among the Magnificent Seven are up here at the forefront. So let's just take a quick look at Nvidia. I will go ahead and add that 5-day simple moving average so that you can see clearly, or more clearly, how helpful that can be. So here we are with that gap up in Nvidia and then the move into this uptrend. Pullbacks to this 5-day simple moving average at that 126 level, ideal buy point. Now, also of note, RSI is up above 70, but take a look. This sharp advance at the beginning of this year, we were able to maintain the uptrend until we can see that if we get that MACD crossover, that's going to be your possible sell signal, certainly a watch out below potential signal on the negative MACD crossover if we do see that. Let's go ahead and take a look at some of these other names. Apple had a very big week last week, up 7.6%. Not a very orderly chart, but let's take a look at this gap up. And in this case with Apple, we were just looking at Adobe. When you're looking for downtrend reversals, the big difference here is it gapped up above this 200-day simple moving average, which can often act as resistance. And then we also had a positive RSI and a positive MACD at the beginning of May, confirming this downtrend reversal. And you can see the advance since then, very sharp advance on news this week. And we are certainly in an overbought position, on the lookout for a period of consolidation as the stock potentially sets up for another leg up. Let's take a look at Microsoft. This was up almost 4.5%. We're going to add that 5-day just to give you an even clearer sense of how useful it can be once a stock really enters a nice uptrend. Pullbacks to that key moving average can be an ideal buy point. And I did want to share Netflix, and I'm going to leave it on this view because we have that 5-day in there. And I will share with you that Netflix was up about 5% last week. And in fact, it did execute today a 2.5% rally into a nice 2-week base breakout. So very, very constructive price action here. Upside price movement in that RSI, and that MACD had a nice black line up through the red crossover. So good news there. Some other items and areas that I did want to share with you last week is the fact that we saw quite a few base breakouts. I just shared with you Netflix, but beyond the Magnificent Seven, the real focus last week, as far as stocks that advanced quite a bit and in some cases experienced a base breakout, were these semiconductor stocks. And here's ARM. And you can see that we had this base breakout, very lengthy, about a 5-month base breakout here on Wednesday, and the stock continuing to advance higher. Going to keep an eye on that RSI because it certainly is in an overbought position. Beyond that, when looking at semiconductor stocks, I did talk about a theme. Here's a name from my MEM Edge long-term buy and hold list, and that's Lam Research, also executing a nice base breakout. More room to go there. And then another name, AMAT. This is Applied Material. And this stock also exhibiting a base breakout earlier in the week into a nice uptrend. Now, the theme here is that Applied Materials and Lam Research are both in the semiconductor equipment manufacturing space. And this is the equipment that they provide is very instrumental in the creation of AI chips. So again, you will need to be selective. Not all names in the equipment space are on the move higher. And one way that you can play the move into the semiconductor equipment could be SMH. This is the VanEck Semiconductor ETF, and both of the stocks I just mentioned comprise each of them 4% of this index. So it will give you more of a representation than SOXX, which is the other very widely known ETF. Last up, I'm going to share with you a couple of downtrend reversals that are not working or have not worked, just so you are aware of what to be on the lookout for. Now, this is Salesforce. They had a huge gap down in response to weaker than expected earnings. But more importantly, this first gap down was all about management's guiding growth prospects lower going into the numbers, and again, guiding lower again. So here we are with that downtrend reversal last week. We can see this rally brought the stock right up to that 10-day simple moving average where it is finding upside resistance. Of note as well is your momentum. Even though we were in an oversold position on the day of this gap down, CRM was the most overbought stock in the S&P. And despite that, we are not able to recover, get those momentum indicators back into positive territory. From here, I'm going to share with you a couple of names that interest rate sensitive that did rally last week and are in the potential throes of reversing their downtrend. Here's Home Depot, HD, and you can see this gap up has put the stock back above this 50-day simple moving average. And we only need to go back to November to see a similar price action move. In the beginning of November, interest rates did begin to fall following comments from Fed Chair Powell. And take a look as we advanced above each of these moving averages, get that momentum up there in positive territory, and that MACD RSI positive, as well as these shorter term moving averages begin to move above the longer term. That is called a golden cross formation, secondary, but it is bullish. And you can see this nice uptrend. Home Depot's decline has everything to do with the company's announcement that they are moving more beyond consumer with their home building and reaching out. They did purchase a company that's going to allow them to work more closely with professional home builders. So next week's numbers relating to those building related reports will in fact have an impact on this stock. Another housing related stock that had a nice potential downtrend reversal. This is Zillow Group, closed back above that 200-day simple moving average. Pretty heavy volume. We do have positive momentum here. Not so impressed that we did not see follow through. And overall, this particular stock does have a rather sloppy appearance. But of note, we are potentially in the throes of a downtrend reversal there. And that is it for this week. If you like what you've seen, go ahead and hit that like button. And any questions you might have, be sure and put them below. I'll address them next week. As always, use that link to trial my twice weekly MEM Edge report for a nominal fee. Have a great weekend. I'll see you here next Friday.